Hi, my name is Sally Gimmon, and I'm the owner of the TrustIsYou.com and a brand new podcast called Stop Paying Capital Gains. I'm so happy about this because we just got them on all the different places, iTunes, Google's, and everything else. So please look for Stop Paying Capital Gains because I've got some great guests there. If you listen to it, please like it and tell others about this. Now, my personal goal is to help people save as much money on federal taxes as legally as possible. This is why I talk about both the business trust and the beneficial trust. The business trust is for 1099 income. I don't care if you're selling things online, if you have a brick and mortar store, if you're an affiliate marketer, if you're an MLM marketer, if you're making 1099 income more than $50,000 a year and you want to save on your federal taxes, you should look at the business trust. I have it. My brother's brewery's in it. My sister-in-law's real estate design company's in it. My 3 online businesses are in it. You should look at it. I'm not saying you need it. You should look at it. Now, with the business trust, now I know my podcast is Stop Paying Capital Gains. Because of how I do my real estate, I do a lot of wholesaling with upset bids and with bank-owned properties. I love it. I can have a bank-owned property. I call 1, 2 real estate agents, say, hey, do you know someone who's an investor? They give me a name. I call them. I wholesale. Super easy. I make at least $6,000 on each deal. Not saying I'm super, but because of my connections of the people I know in real estate, it goes very quickly. So when you wholesale, when you fix and flip, that is capital gains, short-term capital gains, which are 23.8% with past legislation to raise it up to 40% for some tax brackets, $400,000 or more. I'm not there just yet. I would like to be there. Now, that has been passed. It is not in effect just yet. Long-term capital gains. So if you've held a building longer or you've held something longer, it's 15% to 20%. All you business owners out there, if you sell your business, I don't care if it's a solar business, if it's a car wash business, if it's an online business, if you're selling your MLM business, anything like that, the federal government is going to take 15 to 20% out of your sale price. That's a lot of money. Now, my gentleman who just sold the abandoned building on January 30th, he doesn't have to worry about the capital gains. But because he sold this building, we were able to save him over $950,000. If he did not have the trust, he wouldn't have to worry about that $950,000 until April 15th, 2024. Who saves that much money if they don't know about it? He could have been in really dire straits. So that's capital gains, short-term and long-term. Interest income. I do notes, performing notes and non-performing notes. My mentor Jay Tenbaum and SETI have give us tapes so we can look at them. All the money that's coming in from those notes are considered interest income. I am the bank. The bank is Sally. People are paying me money to live in their home until they pay off the mortgage and then they get the mortgage back. That's how you do notes. The BRRRR strategy, buy, rehab, refinance, everything else. One of my clients, he was working full-time as an IT professional and 20 hours a week at the tractor store, had 85 houses, and his wife never saw him because he was paying $154,000 a year. $154,000 a year in interest income. That's how his accountant was running it. And now that he has a trust, he doesn't have to pay that anymore. He quit the tractor store in August and he quit being an IT professional at the end of November. His wife's like, I see him all the time now. Wonderful. Hey, you all who are involved with stock market, dividends, all the money you're making from dividends and you're taking it out and you're spending it, congratulations, you've made some great stock choices. Those dividends are also deferred. One that so many people don't think about is the rent rolls. So if you have an Airbnb, if you have a Verbo, if you have short-term rentals, if you have long-term rentals, if you're involved with a REIT, if you have multifamily, if you have single-family rentals, how the tax bracket is written, there are 7 different layers. Boom, 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 boom. 10% up to 37%. It could be a lot of money. Yes, you can deduct depreciation and all the work you do on there, but still, you can save all those rent rolls with the Spendthrift Trust. Royalties. Hey, if you're an artist and doing NFTs or you're in the meta world, or if you are a songwriter, if you have a book out there. I have a book. It sold a whopping 15 copies, but I'm an Amazon bestseller, and so I don't make much in royalties. But again, you're not your royalties will go through the trust and save you all those taxes. Besides saving you on federal taxes, 1099 income and investors, it's going to keep your information completely private, and it's going to keep you from being sued. Why wouldn't you look at the trust? Or how is this trust not for you? If that's good enough for the Rockefellers and US presidents, it's good enough for me. It should be good enough for you. Again, my name is Sally Gimmon. My website is thetrustisyou.com. My new podcast is Stop Paying Capital Gains Now! Exclamation mark. Please listen to it, like it, because I'm trying to get, it's brand new. I got 7 episodes out there, but I appreciate you listening to me. Have a beautiful day. Take care.